What would a Launchpad social media platform look like? Maybe an actual rocket platform? Start the countdown. Welcome back to the Investor Place Launchpad, where we take trending investment ideas and try to take them to the moon. I'm Head of Mission Control, Aaron Davis, and this week we're jumping into the world of SPACs, specifically the partner behind former President Trump's recently announced social media platform, Truth Social. That's right, Digital World Acquisition Group. Before we dive in, we'd love to continue to grow our channel here at Investor Place, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's launch into the world of SPACs and the Digital World Acquisition Group and see where it might take us. First, for anyone unfamiliar with SPACs, the term stands for Special Purpose Acquisition Company, which are essentially groups that have a lot of money and merge with smaller private companies, thereby acquiring them in order to take the small private companies public. SPACs are traditionally a company with no commercial operations and formed explicitly to raise capital through an initial public offering for the purpose of acquiring or merging with an existing company. Companies like Lucid Motors and Robinhood, both went public this past year via SPAC mergers, are examples of popular companies that reached Wall Street through SPAC deals. While return on investment will always vary from company to company, the benefit for smaller companies is a quick and less risky path to becoming a public one. This week saw the rise of another popular meme stock as a result of the announcement of a SPAC merger between the Digital World Acquisition Group and former President Trump's Trump Media and Technology Group. The announcement saw an immediate 85% rise in the first hour of trading, with momentum continuing last week as the company continued to push its announcement of Truth Social, a conservative social media platform with claims to emphasize First Amendment rights. The initial hype was also due in part to the stock catching the eyes of meme traders through our Wall Street bets, similar to how GameStop and AMC saw huge growth this past year. While these gains are certainly impressive, the overall sentiment towards the former president's new platform, much like the president himself, is proving to be quite divisive as far as long-term investments are concerned. With an almost 200% gain last week and DWAG bragging about their successes, some are seeing warnings against pouring into the stock at this point, with some believing the stock is already topped out and ready to drop back down. With a corporate overview of the Trump Media and Technology Company unable to list any officers, employees, or operations, rather touting the former president's number of followers on Twitter before he was banned, the company has claimed much but done little to showcase how this investment might actually benefit long-term investors. While the company overview also claims a non-cancelable global community, claiming an emphasis on freedom for users and standing up for censorship, the pending platform already has some strict rules of its own. According to the Washington Post, the platform reserves the right to ban users and safeguard itself from lawsuits with Section 230 protections. Overall, this may be a stock that currently seems to be trending, much like popular cryptocurrencies like Ethereum, Bitcoin, or Shiba Inu, which as a result of popularity and cultural impact has people jumping on the bandwagon every day. However, IP.com contributor Brett Kenwall had this to say about DWAG, stating, "Don't be tempted by FOMO, fear of missing out with this one. There's nothing that says you have to trade the trending names, no matter how popular they may seem." Further indications that these incredible gains may only be short-term was also illustrated through multiple halts of trading by the Nasdaq last Friday, which did appear to be the result in some degree due to sell-off. This SPAC merger will definitely be one to watch, as the launch of Truth Social is slated for beta this November with a public release in 2022. But what do you think? Are SPACs a good investment? Are there signs to be worried for long-term investors with DWAG? Will you be using Truth Social? We'd love to hear your thoughts in the comments section below. Well, that's all we have from the Launchpad this week. If you'd like more insights like this, head on over to investorplace.com, where we release articles daily. And as always, check with us back here at the Launchpad, where we will continue to look for trends like the DWAG merger and other SPACs. And as always, try to shoot for the moon.